Tesla shares have been limping alongside around $200 in May 2019, about the place that they had traded 5 years earlier, when Elon Musk's greatest wall road booster tried a gutsy experiment. Cathie Wood and her ARK funding administration have been already well known for his or her way out there predictions that Tesla would construct a fleet of robo-taxis price $1 trillion and that its shares would soar 20 or 30-fold by 2023. Now she stirred the pot once more by publishing online ARK's new bull's case valuation of $1.4 trillion, implying a share worth above $6,000, full with each Excel calculation and assumption behind these estimates. The criticism got here quick and livid. Tesla brief vendor Jim Chanos, famed for uncovering Enron's fraud, woods to process over ARK's forecasts of Tesla's gross margins. ARK has produced as an ahead pricing for Tesla, not a valuation, sniffed valuation knowledgeable Aswath Damodaran, a finance professor at New York College. The mannequin, he famous, didn't embody a reduced cash flow evaluation and carried incomplete forecasts on the prices Tesla would incur to scale its automobile manufacturing. That $1 trillion worth ARK was putting on Tesla's non-existent robo-taxi fleet? Strikes me as extra fairy story than valuation, Damodaran opined. 16 months later, Tesla shares, after a 5-for-1 August inventory cut-up, have been buying and selling at $400. In different phrases, they'd risen tenfold, pushed up by hypothesis and pleasure over Musk's autonomous driving and battery applied sciences and Tesla's stronger-than-expected monetary efficiency. Musk's automotive firm is now priced 5 occasions greater than Ford and Normal Motors mixed, and Wood has made a fortune. The nitpicking skeptics, she believes, have missed the massive image. As electrical automobiles go more and more mainstream, manufacturing efficiencies and advances in batteries and different applied sciences will reduce what it prices to make them. And as sticker costs fall, demand will surge, together with from companies like ride-sharing firms. In September, Musk promised a $25,000 automotive inside 3 years. In the meantime, Wood, 64, is completely pleased to have a refrain of critics. It nearly makes me really feel comfy, to be sincere, as a result of it means if we're proper, then the rewards can be fairly monumental. Wood's consolation with going her personal method has helped her flip ARK into one of many fastest growing and top performing funding companies on the planet. Its flagship $8.6 billion ARK Innovation Fund is up a staggering 75% in 2020 and has returned an annual common of 36% over the previous 5 years, almost triple that of the S&P 500. Whereas most star inventory pickers deal with their work like state secrets and techniques, Wood makes ARK's analysis freely obtainable online and posts real-time logs of her agency's trades. As an alternative of hiring MBAs, she prefers to carry on board younger analysts with backgrounds in topics like molecular biology or PC engineering, figuring they're extra prone to spot the subsequent pattern. Even the construction of ARK, an acronym for Lively Analysis Information, is authentic. Wood manages 7 portfolios designed to capitalize on breakthroughs in robotics, power storage, DNA sequencing and monetary and blockchain expertise, and makes them obtainable to buyers, significantly millennials buying and selling on Robinhood, as tax-efficient exchange-traded funds. It's Tesla place and a pandemic that has accelerated adoption of the applied sciences embedded within the 35 to 55 firms in every ARK ETF have helped its belongings almost triple in 2020, to $29 billion. Coronavirus has catapulted our revolutionary platforms into excessive gear as a result of their remedy issues, Wood says. Innovation solves issues. Forbes conservatively values ARK at $500 million, or about 2% of belongings below administration, roughly the identical number of as publicly traded T-row value instructions. Wood's 50% plus possession offers her a web price of $250 million, good for the no. 80 spots on Forbes's 6th annual checklist of America's richest self-made ladies. It's simple to dismiss Wood because of the face of a stock market bubble created by the Federal Reserve's easy money insurance policies. However, she has survived her share of each bubble and bear market. Whereas an economics scholar at the College of Southern California, she studied below supply-side guru Arthur Laffer and apprenticed from 1977 to 1980 at Los Angeles fund Big Capital Group, watching as rates of interest approaching 20% crushed the economic system and the market. After graduating in 1981, she joined Jennison Associates, now a fairness funding arm of Prudential, as an economist in New York. There she made an early name that inflation and rates of interest had peaked. That garnered eye rolls from her superiors, however Wood was proper, and the expertise inculcated in her an appreciation for the possibly large upside of going in opposition to consensus. Because the pandemic took maintain, Cathie Wood loaded up on tech shares that she accurately predicted would lead the restoration, and purchased herself a home in ritzy Hilton Head, South Carolina, from which to work. Pissed off together with her professional path at Jennison and desirous to analyze particular person firms, one Friday Wood up and give up. Her mentor on the agency persuaded her to return the next Monday and moved her into fairness analysis. She coded nascent Wi-Fi telecom firms within the late 80s and early 90s, getting a ground floor view of the massive financial and societal adjustments coming as cell phones grew ubiquitous. In 2001, she moved to New York based mostly AllianceBernstein as chief funding officer for thematic portfolios. However, the 2008 monetary disaster ushered in a period during which energetic managers underperformed the S&P 500, and trillions flooded into low-cost index funds. Wood determined a recent strategy was wanted. In 2012, she proposed placing actively managed portfolios of revolutionary firms inside an ETF construction. The thought obtained nowhere at AllianceBernstein. 2 years later, she launched ARK in New York. Success wasn't rapid. Within the agency's first 2 years, its flagship fund positioned within the backside quartile of its peer group, based on Morningstar. By the tip of 2016, the Wood had attracted simply $307 million in belongings, and ARK's 0.75% administration price wasn't protecting overhead. To maintain going, she dug deep in her financial savings, offered minority stakes, and struck partnerships with bigger companies to construct distribution. Japan's Nikko Asset Administration and the mutual fund agency American Beacon now personal 39% of the corporate. Nearly 10% is owned by the agency's 24 staff. In 2017, ARK took off, buoyed by surging costs for shares like Netflix, Salesforce, DNA sequencer Illumina, digital payments processor SQ and digital well-being supplier AthenaHealth. Belongings rose tenfold, and ARK started to construct its model on the again of daring predictions, an energetic Twitter presence, and the free analysis it put online. It additionally attracted discovery for a cryptocurrency fund obtainable solely to accredited buyers. Wood began shopping for Bitcoin, which she calls an insurance coverage in opposition to inflation, in 2015 at $250 a coin. Wood takes a top-down strategy to construct portfolios, first figuring out disruptions by any means doable. Together with crowdsourcing, she even opens the agency's Friday afternoon analysis conferences to outsiders, who can name in through Zoom. Economics is central. Wood is most bullish on improvements if she believes their prices will decline over time, creating actual demand. When scoring potential holdings, ARK seems to be a company tradition and administration execution on development initiatives. Solely on the finish of the method does Wood worth an organization, refusing to purchase something she doesn't count on will rise by 15% yearly over 5 years, ARK's minimal anticipated holding interval. The tumult of 2020 has been good for ARK. In March, when the pandemic emerged and shares plunged, Wood accurately predicted fast-growing tech firms would lead the world and monetary markets to restoration. She concentrated ARK portfolios in Tesla and different prime picks together with education software firm 2U and actual property platform Zillow. Then, in the late summer season, when Tesla soared, she trimmed her holdings and constructed a big place within the battered shares of Slack. With all profitable improvements, after all, come copycats. Gimmicky-themed ETFs have proliferated in every part from pets to sports activities playing to work from home. Fund giants Dimensional Fund Advisors, Constancy Investments, and T. Rowe Value have all not too long ago launched their very own slates of actively managed ETFs. An optimist by nature, Wood nonetheless gives some unsettling predictions for the subsequent 5 years. She expects a broad swath of huge industries, banking, power, transportation, well-being care, to be disrupted by technological change, with many employees displaced. The outcome, she believes, is that financial development, inflation, and broad market indexes will all fall persistently wanting expectations, offering a possibility for energetic managers to select the revolutionary winners that can proceed to drive market cap good points. I feel the benchmarks and the indexes are going to undergo a horrible interval. We're already seeing it, she says. We consider their being more and more populated by worth traps. Does she suppose the market is now in a bubble? Nope. Uncertainty over the pandemic and the election, Wood helps President Trump unabashedly, means cash has been flowing out of shares and into the security of bonds, she notes. The truth that individuals are fearful now that we're again on the S&P 500 buying and selling at 25 occasions earnings tells me that we aren't in a bubble in any respect.